What's good, everybody? Welcome back to another video. Today I wanted to give you guys a good trade breakdown. I took a banger today, I'm not gonna lie. I was trading NQ futures. I made about $2,000 in a couple of minutes, so I wanted to break that down for you guys so you can understand the champagne model. Let's get into it. All right, so here we are on the Nasdaq NQ futures, the 4-hour chart. In my group last night, I posted this chart on NQ and I told everybody to watch for the inversion fair value gap, which is this fair value gap right there. So you can see right there, watch this 4-hour SIBI that got inverted. So I was waiting to see overnight what price was gonna do. I wanted to see if it continued to respect this 4-hour fair value gap or if it was gonna invert it. That way I can take longs in the morning. So I told my team this last night, and that's usually what I do. Like, I will mark up my charts the night before and then see how the overnight sessions respond to my key levels. So that way I know what I'm gonna be looking for when it comes to the New York session. So let's zoom in. So right here, you can see this 4-hour fair value gap. And once price came back up to it, you can see how well the bodies of these 4-hour candles are respecting it. Look at these bodies right here. Look at the wicks doing the damage, but the body's telling the story. All right, so we've been in this market maker buy model for a little minute here. You can see that's the sell side of the curve and this is the buy side of the curve. So I've been trading long all week for the most part. I mean, we did have a bearish day here, but check out what happens when you put your fib on there. So when you put your fib from this swing low to this swing high, you can see that price comes right back to a discount below the 50% mark. It comes back to a discount fair value gap right here. Not only do we have a fair value gap, we also have 4-hour order block right here. So with the champagne model, there's a couple of different confluences that you need for the stars to align. And once that happens, it pretty much checks every box that traders deal with. Like, it helps me to be patient in the market. It also gives me my daily bias, and it tells me exactly when to execute, when to get out. So I love this model. So we can already see how price pulled back into that fair value gap, which is internal range liquidity. And then it went higher to this swing high, which is external range liquidity. So that's the reason that I took this trade. But more importantly, with the champagne model, you want to make sure you're in line with this candle right here, which is the daily candle. So you can see the daily right there. And if you want to use this indicator, it's called the higher time frame power of 3 indicator. And with the champagne model, you want to make sure you're in line with that daily candle, so that way you have the momentum of the distribution of the daily candle. That's a big part of that's the biggest part of my model. I'm trading in line with the daily candle, or if I'm at least trading counter trend with the daily candle, I know not to try to hold trades long and to take quick profit. So as long as I'm in line with that higher time frame candle, and then I use the market maker model to get me to where I'm trying to go, all of this is going to help me build a bias and a narrative for the day in the session I'm trading. So this is the higher time frame. Let's go to the lower time frame so you can see how I was able to execute this trade. And this is a live market, so you can see that price is still boosting up to this 4-hour fair value gap here. So let's go to the 15-minute chart, because this is a 4-hour chart. All right, so on this 15-minute chart, what do we have? This is the New York session. This is a session I trade here. So you can see we had SMT on this swing low here with ES. So if I were to go to ES, you would see that this swing low right here at 8:15, it did not run out the low of 3 a.m. in the morning. So if you can go do this on your own ES chart, look on the chart, you'll see that this high, or you'll see that this swing low was actually higher than this swing low on ES. So when you have bullish SMT and you're looking to go long and you have it at the time you're looking for, you have it in a key level, that's just a major key and a major confluence that shows you you're on the right side of the market. So what else do we look for here? We got the 4-hour fair value gap from the higher time frame. We also have a 15-minute fair value gap right here. So you can see that price started to invert that. That's when I got in my position on the lower time frame, and then I simply just targeted these highs and this candle up here. So let's go to the 1-minute chart so you guys can see. But I want you to see this before I switch off of this chart. I want you to see how this is also a market maker buy model within the higher time frame market maker buy model. So it's models within models. Price is fractal. What you see on one time frame, you'll see on the other. All right, so here's the 1-minute chart. and you can see my entry was just perfect, no drawdown. And let's talk about it. So the 15-minute fair value gap is right here. Right here is the 9:30 open, right here on this candle. Price boost up, it comes back down here, and it also had SMT in here somewhere. It had an entry SMT, and then it had these sessions SMT over here. So either way it goes, I was looking to go long already since last night. So these were all the confirmations that I wanted to see. So once price displaces up after failing to go lower, you can see it leaves a fair value gap right here. And within that fair value gap, that's where I'm looking for my entry. I call a signal out to the team. I enter here. I put my stop loss right underneath this red dotted line, which is a 12 a.m. open. You could have put it underneath here if you really wanted to be safe. I knew that it was a chance we would probably go higher for all of these reasons. And then once I got in, there was no drawdown. I started to see breakaway gaps, which is what you want to see. You want to see these swing highs within a gap. That means that price is most likely not going to fill this gap. It's going to tap it and keep going. And that's exactly what it did. It went right to my TP. I made about $2,000 on this trade. Just a couple minutes. This is a 1 minute chart. So let's see. 1 minute, 2 minute, 3 minute, 4, 5, 6, 7, 8, 9, 10. I was out of this trade within 10 minutes. I made $2,000, and this was an A+ champagne model. The entry, you can see it was around macro. There's a 950 macro. Some people believe in macro, some people don't. I execute these trades live every single day in my group. I put the footage on my actual Instagram story and my Twitter page so y'all can see in real time what the champagne model looks like. And this was just a good trade. As you see, it kept going higher all the way up to that fair value gap up there. Look at it. It tapped it perfect and then started to reverse. I didn't want to hold that long, to be honest. I just wanted to get out of here, get my low hanging fruit. And this was a good trade. I risked 16 points to win 77. So this was an A+ champagne model. This is the same exact model I execute every single day that I trade. If you want to learn more about this trade, make sure you click that link in my description. Come join the group. There are plenty of people just like me who trade this same model, who have learned from me, who make payout after payout after payout. That's all I got for this video. Until the next one, out.